9 automotive brands are about to vanish from the map. And I don't mean struggle or fail, I mean vanish. And what's coming after them is worse, which is a complete redrawing of who owns Europe's car market. By 2026, the brands you thought would always exist won't. The winners won't be European, and the continent that invented the automobile will be playing catch up in someone else's game. Europe's auto industry isn't in trouble, it's in freefall. Stellantis is shutting down 15 factories, Volkswagen just halted production in Germany for the first time in decades, and EU car registrations dropped 1.9% in the first half of 2025. By June, it was down 7.3% year over year. On the flip side, manufacturing costs are up nearly 40%, supply chain inflation is crushing margins, EU emission targets are adding billions in compliance costs that most automakers weren't ready for, it's hitting from every angle at once, and then there's China. Chinese EV brands now own 11% of Europe's EV market. They're growing every quarter. Consumers are looking at what they offer, which is better tech, lower prices, solid quality, and asking why they should pay more for a nameplate that's been around for decades. By 2026, the car map of Europe will be unrecognizable. Now, here are the brands that won't exist anymore, starting with number 9, DS Automobiles. Now, you might think the first casualty would be some obscure startup, but the real graveyard is filled with brands that actually try to compete in the premium segment. DS sold 41,000 cars in 2024. Now, that sounds respectable until you look at the finances. After marketing, R&D, and overhead, Stellantis lost 4,200 euros on every single vehicle. Not millions in total losses spread across the year, thousands per car consistently. The business model is fundamentally broken. The dealership network tells the real story. DS dealers are averaging just 18 sales per month. To break even, they need 50. That's a gap nobody can bridge. Dealers are essentially running a car showroom as a charity operation, hoping someone walks through the door and actually wants to buy something with a DS badge on it. Most days, that doesn't happen. Stellantis has made the call already. By mid-2026, DS won't exist as an independent brand anymore. It's being folded into Citroën. The luxury experiment becomes a trim level. DS is moving from brand to option package. Number 8, we have Lancia. One thing I will say about DS is that they had ambition. Lancia is something worse. It's a ghost haunting its own showrooms. Lancia sold 38,000 cars in 2024. It sounds like something, except almost all of them stayed within Italy. The brand has virtually no presence anywhere else in Europe. When you're a European automaker that only sells in one country, you're not competing anymore, you're surviving on nostalgia. Stellantis bet everything on the Ypsilon Electric, their EV resurrection play. The relaunch was supposed to be Lancia's comeback story, but instead, it's moving just 200 units per month. The dealer network has already collapsed to 160 locations, and most of those aren't even standalone Lancia dealerships anymore. They're sharing showroom space with Fiat. Lancia doesn't get its own space. It gets a corner. By 2026, expect Lancia to either vanish entirely or become a sub-brand appendix the way DS is headed. Either way, the Lancia name as an independent competitor is already dead. Number 7, we have Infiniti. Now we have Infiniti, which makes both DS and Lancia look like market darlings by comparison. Infiniti sold under 400 cars in Europe in 2024. Not 40,000, not 4,000, under 400. Meanwhile, you look at the brand and it's been trying to stay afloat by bleeding out 50 million euros annually. Do the math. That's a losing proposition of epic proportions. The company is hemorrhaging money to maintain a presence that almost nobody notices. The problem is structural. Infiniti never built a real dealer network in Europe. There's no loyalty to build on, no infrastructure, and when the parent company announced an EV reboot to save the brand's European presence, industry analysts didn't just dismiss it, they called it delusional. And they were being generous. Look at Infiniti's performance anywhere else and the picture gets darker. The brand has collapsed in China. It's down 35% in the US market, its home turf. So if Infiniti can't compete in America, why would anyone think it could survive a European relaunch? Infiniti isn't fighting for market share in Europe, it's already lost. What's left is just the slow motion collapse. Number 6. Alfa Romeo. Infiniti was never expected to win. Alfa Romeo, however, that's a different tragedy entirely because people actually wanted it to succeed. Alfa Romeo sold 48,000 cars in Europe in 2024. That might sound decent until you realize BMW sells that much in roughly 3 weeks. The margin isn't close, it's humiliating, and Alfa's signature product, the Tonale crossover, is moving just 1,100 units per month. The Mazda CX-5, a conventional forgettable crossover, sells 10 times that number. Alfa has heritage, design, and Italian DNA. Mazda has competence, and competence is winning. Here's where it gets brutal though. Stellantis promised a €30 billion electrification fund to revive Alfa Romeo and save the brand for the EV era. That was the plan, the salvation narrative. Except only €2 billion has actually been spent. When a company announces a massive investment fund and then doesn't fund anything, they're not being conservative, they're admitting the patient is terminal and they've stopped treatment. Experts inside and outside of Stellantis are already predicting the endgame. Alfa Romeo gets merged into either Maserati or Jeep within the next few years. The brand survives as a sub-brand, losing what little independence it actually has left. Passion meets reality, and reality wins every time. Number 5. Jaguar. Then there's Jaguar, which didn't just fail the market, it actively declared war on its own customers. Jaguar's 2024 sales collapsed to 31,000 units in Europe. That's down from 78,000 2 years ago, a 60% drop, but instead of fighting to win back the market, Jaguar made a strategic decision that can only be described as self-immolation. Kill every current internal combustion engine model and go fully electric by 2026. Here's the catch. The new all-electric Jaguar lineup starts at €100,000 and up. Jaguar's customer base wasn't buying €100,000 cars before. They certainly aren't going to start now when the economy is contracting and consumer confidence is in freefall. The brand is essentially firing its existing customer base and betting everything on a luxury EV segment that's already saturated with competition from Tesla, Porsche, and every other manufacturer with deeper pockets. To complete the transition, Jaguar is closing dealerships and moving to online-only sales. No showrooms, no test drives, no human interaction. Just hope people buy a €100,000 car sight unseen from a website. Land Rover, still technically part of the same company, is already distancing itself publicly. By 2026, Jaguar will likely exist as a boutique line if it exists at all. Number 4. Maserati. At least Jaguar is trying something. Maserati isn't trying at all. It's just existing on borrowed time. Maserati sold 8,200 cars in Europe in 2024. For a luxury brand with over a century of heritage, that's not just low, it's functionally irrelevant. You need volume to sustain a brand ecosystem. Maserati doesn't have it. It barely registers as a market participant. The product lineup is in freefall. The Grecale SUV, which was supposed to be Maserati's volume play in the crossover segment, is underperforming all expectations. The MC20 supercar, their flagship halo vehicle, is down 30% in resale value. But the real killer is depreciation. The Ghibli Maserati sedan loses 70% of its value in just 3 years. When your luxury products are hemorrhaging value like that fast, you're not selling cars, you're selling regret. Stellantis has already pulled the plug on future investment. They've slashed €1.5 billion from Maserati's budget. The brand isn't being fixed, it's being managed into irrelevance. Experts predict Maserati will become what Stellantis calls a design badge, which is a nameplate applied to vehicles engineered and built by other divisions. Maserati the brand will survive. Maserati the automaker is already gone. Number 3. Nissan. Everything so far has been European brands or luxury experiments imploding under pressure. Nissan represents something different, a major global automaker actively choosing to leave the continent. Nissan's European sales tell the story of a slow-motion retreat. In 2006, the company sold 543,000 cars in Europe. By 2024, that number has collapsed to 247,000. That's a 55% decline over nearly 2 decades, but the real acceleration is recent. Nissan isn't just shrinking, it's exiting. R&D facilities are shutting down, factories are closing, and Nissan is cutting EU operations by 75%. The dealer network has plummeted from 2,800 locations down to 1,000, and it's still shrinking. Nissan is systematically erasing its presence on the continent. The official strategy is to focus resources on China and the US. Europe, once a core market for Japanese automakers, is now being treated as secondary. What's left? Rebadged Chinese EVs. Nissan doesn't see Europe as a place to win anymore. It sees it as a liability to offload. By 2026, Nissan won't be competing in Europe. It'll be managing a portfolio of Chinese vehicles with the Nissan badge slapped on them. Number 2. Chrysler. Now, if Nissan is surrendering, Chrysler is a zombie, and it's been dead for years. Chrysler sold 187 cars in Europe in 2024. Not 187,000, not 18,700, not even 1,870. No, 187. You could fit the entire annual sales volume in a parking lot. The brand is being kept on life support by Stellantis, not because it has a future, but because it hasn't been formally buried yet. The Chrysler lineup in Europe consists of the Pacifica minivan and the 300 sedan, a vehicle that hasn't been substantially updated since most people's high school years. That's it. Everything else is gone. And the new vehicles being released under the Chrysler badge, they're rebadged to Peugeot 508s. Same car, but different logo. Chrysler isn't a brand anymore. It's a marketing department that applies a name to other people's products. Here's the really dark part. Chrysler is being kept alive artificially for one reason: emissions credits. Stellantis needs the brand to exist on paper to manipulate compliance numbers. Once that accounting trick no longer works, Chrysler's going to be done. There's no active website planned beyond 2026. No new products, no strategy, just the slow fade to black. Number 1. Stellantis. Now, everything we just covered, DS, Lancia, Infiniti, Alfa Romeo, Jaguar, Maserati, Nissan, Chrysler, they're all symptoms of one massive disease. Stellantis isn't just the parent company, it's the epicenter of the collapse. Stellantis is a Frankenstein built from the merger of Fiat Chrysler and PSA in 2021. 14 brands, 260,000 employees, 39 billion euros in debt. It was supposed to be a powerhouse, but instead it's become a black hole that absorbs capital and resources while bleeding market share. In 2024, Stellantis sales dropped 27% and the stock is down 50%. EU regulators aren't waiting for the company to figure itself out. They're already preparing what industry insiders are calling a controlled disassembly by 2026. That translation means Stellantis is too big and too broken to fix, so they're going to break it apart and salvage what they can. Peugeot, Citroën, and Opel are expected to survive, though Opel may end up under Chinese ownership to secure funding. Fiat gets absorbed, Jeep and Ram return to US control, and the rest gone or consolidated into irrelevance. Stellantis didn't fail because the market collapsed. It failed because it was built on the assumption that size and consolidation could solve every problem. By 2026, regulators will have proven that assumption catastrophically wrong. The company that was supposed to save European auto manufacturing is the reason that it's dying. So, who makes it out alive? Not the brands we watch die, and definitely not the mid-tier players caught between consolidation and disruption. The survivors are consolidating further. Volkswagen, BMW, and Mercedes, the Germans who still have cash, scale, and vertical control over EV production, will emerge stronger. Hyundai and Kia, despite being Korean, has built genuine EV competence and market presence. Geely Volvo, backed by Chinese capital, is positioned to own the transition. These aren't survivors by accident. They're survivors because they have what the collapsing brands don't: money, technology, and infrastructure that actually works. But here's the twist that Europe won't see coming. Chinese automakers are moving in. They could own 25% of the EU market by 2030. BYD, Li Auto, and the others aren't just offering cheaper cars, they're offering better technology at lower prices with battery ecosystems that outclass what most European manufacturers are building. Here's the brutal reality. The continent that invented the car is being rebuilt by the companies that didn't. By 2026, Europe's automotive landscape will be dominated by German mega brands, Korean technology, Chinese capital, and ultra-premium heritage players. The middle, where most European brands used to live, will be gone. So, which of these brands deserves to survive? Drop your picks in the comments section below, and if you want to know how Porsche plans to actually make it out of Europe's industrial extinction, like, share, and subscribe. Next week, we break down their survival strategy.